G'day everyone, welcome back to Pete's Investing. For a quickie, we take a quick look at trading the MACD or moving average convergence divergence strategy. I'll first demonstrate a single trade. So here you can see here when the MACD histogram breaks above zero, we enter our first lot of shares, and here we buy, in this case, we buy 20 shares of this particular company. Now the share price dips a bit, then recovers, and it starts dipping a bit. And we exit the trade when the histogram breaks below zero, which it did back here. That's where we exit the trade. The criteria to exit the trade there would be when a histogram breaks below zero, but also the close is greater than the entry price. So we don't care how little it is, we want to get out when a histogram breaks below, as long as we're making a profit, which it has done in this case. So in this little trade, it closed out at 2986 and it opened up at 2959. So it only made about $30 odd, including brokerage that's taken out in that little trade. Another example is over here. Histogram breaks above zero. We enter the first lot of shares, and here we've entered 20 shares again because it's a very similar price as before. The price takes a bigger dip. We don't use stop losses. We let it recover. Yeah, the histogram breaks below zero, but we don't exit because our close price is less than the average price, where we bought. So we stay in the trade, and it recovers, and then it starts dropping off again. You can see here we're in a positive. We're well above our entry price. Histogram is less than zero, so we exit the trade. In this particular trade, our closing amount was 3052, opened up at 2986. So it made a few extra dollars than the previous trade. That's a single trade. Here we're going to demonstrate the average down approach. So here you can see in this trade here, we enter the first lot of shares there and a second lot of shares there, and we exit the trade at that point there. So what's the criteria? Okay, to enter the trade there, as per our trading rules, when the MACD histogram breaks above zero, which is those green bars there, that's when we enter the first lot of shares. So the price goes in our favor, but we don't exit, because what we exit, our criteria is when the histogram breaks below zero, which it did there, which it would have done on that bar there. And that was below our entry point, so we would have made a loss had we exited the trade there. So we hold on. Now the price drops. Now we don't enter again until the histogram breaks above zero. We don't do that until at this point back here. Now why didn't we enter back in these areas? So the strategy I'm using is basically, first of all, we need to draw a channel. Let me just draw a basic channel for you. So what I do, you look at the previous highs and lows. So let's draw roughly draw some lines between that point to that point. And then we draw a ruler and just measure the distance between that point and that point. So it's about 5.5% variation. So what we're saying is basically a 5.5% drop at least before we enter the next lot of shares. And that's what we would have done back here somewhere. So it's less than the 5% or 5.5%, and our MACD breaks above zero. These probably would have just missed out. That would have been fairly high. That would have been probably just below the exit entry point, and that would have been fairly high as well, whereas this one is below the 5.5% entry. So we enter the second lot of shares there, as you can see there, for a number of shares, and that we've now reduced our average price somewhere down here. And we exit the trade once the MACD drops below zero, which it did back here. It's hard to see, it's a bit small, but it drops below zero there, and we exit the trade. So we started off with profitability on our profitability chart. We started off with 2409. We closed out at 2528. Here are the trading rules for the MACD. We enter the trade when the MACD histogram crosses over the zero line. We exit the trade when the closing price is greater than the average price, and the MACD histogram crosses down through the zero line. We average down when the close of the day is less than the average price, and the MACD histogram crosses over the zero line, and a minimum gain of at least the previous high-low range of the last 100 bars has been made. To view the full analysis of this strategy and more on Pete's Investing channel, click on the link in the description below. Thanks for watching, and see you in the next video.